just welcome again. Welcome to everybody. We'll just do a quick round of introductions. I mean, this is a session that we're running jointly with BONARD, and we've really been covering this sector for a long time, and interested because when we first met Samuel, there was very little real focus or information around student housing, and so it's been fantastic, you know, that Samuel and BONARD have come in and become to a certain extent a sort of, you know, go-to in terms of the, you know, global data and information related to student housing, and so very interesting for us to be able to pick up on their views, and you to be able to get the latest information from Samuel. Let's just do some quick introductions. Maybe let's start with you, John. Let's just if you briefly introduce yourself and the company, John, and then we'll just go around the people who are the speakers rather than everybody, and then everybody will know who everybody is. John, let's just start with you.
Yeah, happy to do that. So I'm John Dishman. I'm Pro Vice Chancellor at Coventry University. Head office Coventry University is based in the UK. We have 5 campuses across the UK, 4 in London. Main campus is in Coventry, which is central UK. And we have another campus in the north of the UK. We see ourselves as a global university. We have regional hubs in the Middle East, in India, in Singapore, and a new one opening fairly soon in Rwanda, sub-Saharan Africa. We have a large organisation. We're about £400 million turnover, 38,000 students in the UK. We are one of the top universities in terms of recruiting international students. We have about 10,000 international students come from across the world to the UK. On top of that, we did have about 4,000 EU students. That situation has changed as a result of Brexit, and part of our response to Brexit, although not the only one, not the only reason, was to establish branch campus at the university. So we opened our campus in Poland, Wroclaw, in September last year. We, as a branch campus of the university, can do anything that the UK university does, although it is registered as a foreign entrepreneur. We don't receive any funding from the Polish state, and we're regulated by the UK government. And our offer there is in some way to respond to the fact that many EU students probably won't come to the UK in future, as they were funded in quite a different way. They're able to access student loans from the UK government. They had to pay their own living expenses, but they could come to the UK funded by student loans. That's gone, and they are now treated as any other international student, and that means an increase in fees and no access to student loans. So to try to mitigate that impact and to establish a European base, we have another base in Brussels, but to establish a European base where we could teach from, established our campus. It's fairly small at the moment, impacted considerably by COVID in terms of recruitment, but we are up and running. Things are looking more positive from this September, when we'll have a large number of students. So originally the campus could only offer places to students from the European Union. We've now established opportunities for students outside the EU, and that's caused quite a considerable amount of interest from international students from non-EU states. And we are just getting into the legal discussions around us as an organisation being able to access European funds for the benefit of the EU students. in a nutshell, that's where we are. That's where I am.
Great, thanks very much, John. Really interesting, and we'll drill down into a number of those things. Armon, just a brief introduction of yourself and the company.
So hi, I'm Armon Bar-Tur. I'm the CEO of BaseCamp Student, which we founded now 6 years ago, focusing on Germany, Poland, and the Nordic countries, Denmark, Sweden, Finland, Norway. We are a vertically integrated company. We acquire, develop, operate, and own in a portfolio. We currently have 9 properties open. It's about 4,000 beds, another 12 properties under development, and a large pipeline behind that. So quite active, especially in the Polish market, and very excited to see how this is continuing to develop.
Great, thanks very much, Armon. Nils, over to you.
Better with audio. Yes, good morning. My name is Nils Hübener. I'm the CIO and board member of Corestate Capital Group, Frankfurt, Luxembourg-based European integrated investment manager. We have about 28 billion euros of assets under management, really in all sectors. Very strongly active both in the private debt market, but also obviously in real estate equity with funds and mandates in all sectors. One of our key focus areas is micro living, including Pbsa, but also service apartment. Excuse me. And we have currently a bit more than 5,000 units that we operate through our own brand, Unique, Open, and another just under 2,000 under development or opening shortly. So coming up to about 7,000 beds in the near future. And we also operate a service apartment business called Join that is opening a couple of units and properties in the course of 21, bringing it up to about 2,000 beds in that corner. So this is one area where there is some exposure and focus on Pbsa and micro living in the wider sense. But we also own CRM in the UK. One of the major managers in the area, running a largely third-party business with over 23,000 units under management. Poland, we've sort of operated and opened one unit, one property, building another one, and want to expand in the market.
Super, great. So really interesting panel, but also, of course, if you've got views to share, it's interesting to have. I mean, we've deliberately had a smaller invited group of guests here for this session, so that again, if you're a bank or if you're an operator, feel free to share your views, because part of the idea is also to pick up on everybody's experience of what these CEE markets are like in terms of the student housing side. You'll be delighted to hear that I've turned off the sound when people join, and also made sure that everybody who joins mutes, so then you don't need to worry about that any longer. If for example your children who are rename my Zoom have renamed yours, do feel free. You're permitted to be able to change that as well, so you can update that to your name and company. So that's all enabled for everybody. As mentioned, we're going to start with a presentation from Samuel. I mean, interesting, Samuel. I mean, over the last few years, sort of everybody's come to know BONARD as being a kind of go-to for this kind of data. I've seen little data around CE markets, especially. So looking forward to this. So Samuel, if you want to share your screen and just share the presentation with us. And again, if anybody's got any questions about the presentation, feel free to drop that in the chat. And Samuel will either try to pick that up as we go along, or we'll pick it up after the presentation. But over to you, Samuel.
Thank you, Richard, and good morning to everybody. Let me try to share the screen. Okay, can you see the full screen?
Yes. Yeah, no, that's great.
Good. So before I go to about 20 slides today, a little bit of a context. Why we opted for this session together with Richard and Torsten. At CEE and Poland specifically, this region is one of the two emerging regions for student housing and co-living in the world. Other markets are either mature or in a very early stage. So besides CEE, it's LATAM, but other markets probably don't offer that emerging market opportunity. And Poland is one of only 5 big countries that offer to deploy scale in Europe after Germany, France, Spain, and Italy. And scale is very important for this asset class. So we thought that it might be worth to discuss this particular topic a little bit more. So many people already are in Poland and CEE, but probably even more people will or will have to be in this region to deploy the scale. Therefore, you know, on the other side, these emerging markets have a lot of questions, a lot of uncertainty and mistakes, as we saw in France or Germany 10 years ago, or in the UK 15 years ago. So we thought together, and I talked to many of you who are in the room today in last probably 2 months, that sort of it might be useful to throw more data, more experience and more accuracy on this particular region of importance that this is certainly becoming. So just for everybody, this is a bit different format. Even the presentation will be different from all other sessions that we have been holding together with Richard. So we invited, as Richard said, universities, banks, investors, developers, urbanists, urban planners, city halls, journalists, and we have quite a diverse but a relevant group of people in this room. So people either are related to the region or interested in the region and are coming from all these categories I mentioned. So we will probably carry it as a sort of workshop style rather than presentation and panel only. So please feel free and invited to interactive session. If you have a question, then please post it in a chat. Or please turn on the video and jump in and ask a question. But we will try to go deeper than normally. So the presentation will be deeper. The experts on the panel are carefully selected so that we have experience and expertise from operation, from investment, from demand, so university. We will have some polls on the course of the next 90 minutes. And your questions can deepen the conversation as well. As to the presentation, it's about 20 slides as a result of probably 5 years of data of us collecting it over the region, but also in field. So we made an effort as a company and we visited all the properties in the region in last 2 months. So the data is backed up by in-field surveys and in-field exploration, is including mystery shopping, occupancies, etc. So it will be, the presentation will offer sort of a deeper dive, but I have to say that I will talk also about basics, as we have some of our colleagues here from universities or banks who not necessarily have such a rich experience from this asset class, especially from other markets. I will take it from square one through the asset class, and then I will end up in very deep talking about OPEX, CAPEX, NOI, yields, etc., so that we can see the economic feasibility. The slides will be available after the session, so no need to make detailed notes or pictures. And if you wish, we are happy to hold individual meetings with those who are more interested after seeing and reading the presentation. So, about us, to see where we are coming from, we are Vienna-based research and advisory firm focused on student housing and co-living. We expand into other asset classes like senior living as well, but our home ground is student housing and co-living. We have offices in Americas, across Europe and Asia, so we are global but focused. We cover all continents, 130 markets and sub-markets, 7,000 student housing and co-living assets in operation, and 1,000 new assets coming to the market in pipeline. We also cover all the transactions, and we monitor all the opportunities, applications, plots to identify it for our clients. We work with about 40 governments, about 700 investment groups, 100 universities, banks, media, to support them with accurate data, assessments, and deals to close. So, student housing, what it is. The purpose-built student accommodation, mostly done by private sector, but not only, is sort of a modern student residence similar to a hotel, with 18 to 20 square meters rooms, so relatively smaller than normally expected, but very sufficient for the target audience, with communal areas for community life, usually with an active residential manager, well, sort of a lot of services and amenities in the property. Like in hotels, we can segment sort of a 3-star, 4-star, 5-star product. So we have affordable, upscale, and premium product, usually differentiated by finishings, location, and amenities or facilities in the premises. Usually about 70%, 65 to 70% of GBA is gross buildable area is dedicated to rooms, about 18% to communications, and 12% to communal areas. So it's a very straightforward, streamlined product with high efficiency of GLA to GBA ratio, with sort of rich community life. I will try to turn on a video, to 1-minute video, to give you a taste, especially those who don't necessarily are familiar with the asset class. I hope it gave you a little bit of a taste. Sorry about that. A little bit of a taste. Okay. Richard, can you please confirm that you can see the full screen of...
I can absolutely see the full screen, and I enjoyed our second burst of the music, Samuel. Thank you for that.
Thank you. Well, two important things to say with this purpose-built student accommodation. First, It's blurred. It's not always only students, but also young professionals that are hosted in these premises. Not only some of them want to extend their student times, but the product is very suitable for the ages of people that don't necessarily want to take a mortgage or need to move to other cities for 6 months. So the short-term stay is very suitable. So this type of accommodation is sort of student housing and co-living. And second, the demand over here is sort of, or the properties are underwritten, apologies, the properties are underwritten not necessarily for pre-leases, and that's for our friends bankers, but by the overall demand. The students usually stay year or 0.3 years in the property, so it's long-term stays, not like in hotel. And probably a ratio of 1 to 6 demand, so 1 to 6 bed to student or target audience ratio. So if there is 6 times more those of who need bed in the city, then it is the beds in the city, then the demand is strong enough to support the underwriting of the investment, which is in most cities in Europe, even more in CEE. Also, the properties are underwritten by operators, so they have professional experience. They are independent and professional with dynamic pricing, with very professional marketing teams, and they are able to fill the properties in average to 98% occupancies and consolidate those occupancies in maximum year 2. So usually they reach 80% in year 1, 98% year 2, and then they have waiting lists and increase the prices. The third, how the properties are underwritten is location. So it should sort of be 20 minutes from the university, 20 minutes from office hubs, and 20 minutes from city center. So if this is sort of, these factors are met, then the likelihood to have these 95% plus occupancies is relatively safe. So student housing and as asset class, basically out of the 30 asset classes being measured, student housing is in the middle as a number 15 in terms of popularity for investments and developments in Europe. But it is about the mainstream asset classes like hotel, retail, or office. And it's number 4 in terms of significant asset classes. So after logistics, build to rent, and senior living, all the other asset classes that are in front of student housing are less significant in terms of volume. So it's difficult to deploy capital in these particular asset classes. The reasons why student housing is so high is threesome. It's sort of crisis resilient asset class, so it's performing much better now in COVID than other asset classes. It's defensive, so the demand is there in economic downturns, and it's counter-cyclical. So basically the number of students and young professionals in economic downturns is increasing, not decreasing. So in these terms, student housing has become sort of a safe investment. Now it has 10 to 15 years in Europe, so it's well documented, very liquid, very structured, so institutional asset class. So it has a very strong preference in investment and developments. So now a little bit about particular asset class. As I said, in economic downturns, this, as you can see over here, the number of students is increasing, not decreasing. It's because there are less jobs and less opportunities to do something else, but it is an age-limited opportunity for people to study in a way. So it sends more students to study. It's confirmed by these COVID times that student housing is performing. It's not without an impact, but the impact is much smaller on this asset class than on other asset classes. The occupancies are still in the zone of 80 to 90%, in CE and Germany 90 to 95%, which we cannot say anywhere close for about offices, retail, or hotel. The reasons are multiple. The students, even though the universities are online, they consider their study destination to be their home. They have friends there, they have jobs there. Now they feel safer in this type of purpose-built student accommodation than in flats. So the propensity towards Pbsa is stronger. Also, Erasmus program makes it a must for students to travel out and be in a destination, not to lose their funding. So they traveled even though they had to self-quarantine themselves for 14 days. And these premises are ready for it. They have contingency plans. There are new audiences that are using the Pbsas, like young professionals, and there are stronger renewals. So the number of students that renewed the contract is actually higher now than before. So when it comes to the overall mood in the sector is that we haven't seen divestments. The investment mood is rather the opposite. There are current investors, 75% of them want to invest more. And there are new investors and new capital to be deployed that is available from sort of reallocating the capital from other asset classes, this asset class. In CE, even more so. As I said, the occupancies in private Pbsa are about 90%. The reasons of universities to have more international students is even stronger. There are many English taught programs. The number of ranked universities is pretty similar to West Europe, it's about 30, and UK, which is also 28 ranked universities. So as somebody said 2 days ago, it's much more affordable to become a doctor in Poland than in the UK, if not 10 times. On the other hand, the ranking of universities is not probably comparable with the UK, but with some of the European destinations. So with this, a little bit about transactions. So the asset class has not been affected that much, if at all, in terms of transactions. So we have seen 2.6 billion to be transacted in 2019 before COVID, which was created by 89 transactions. And in 2020, we see 2.5 billion created by 76 transactions. The average transaction value in continental Europe per bed or per studio, sorry, per unit, is 136,000 euro. Which is way above the initial investments made probably 5 years ago. So a little bit of a development. The student housing started in the US 20 years ago, then 15 years ago in the UK, about 10 years ago in Western Europe, and about 3 years ago in CEE. As we have already had the experience to learn from the previous markets and their development, now the CEE is, as I said at the beginning, one of the 2 regions that offer the early market, emerging market opportunities. The supply is very low, the private supply is very low, the demand is high and growing. Rents are now sustainable in the zone around 450 in Warsaw to 500 euro, Budapest or Prague. So they are now at a level that it makes it investable. The yield spreads are about 150 bips in between the initial development yield and exit yield. So it's such a yield spread that is unachievable in Germany or other mature markets. The build cost or build CAPEX is about 20 to 30% less than in Western Europe, while the rents are only 10 to 15% less. The exit is relatively safe because the more liquidity is expected. It's a very strong investment demand. It's about €1 billion looking at Poland now, and the yields are now in the zone of sort of good exitable liquid market. We will get there. The difference in between the current build cost, which is about €55,000 per unit, with expected exits at probably closer to €100,000 in 5, 6, 7 years. It's a sweet spot, like it was in France 7 years ago, like it was in Germany 7 years ago, or in Spain, or 10 years ago in the UK. So the region now offers sort of early market opportunity. Now, comparison of provision rates. Let me explain. Provision rate means saturation of the market. So number of beds compared to number of students. And we distinguish two ratios of provision. This one, which is all beds to all students, so public beds or public student housing and private student housing and religious student housing together, compare with all the students. And the second one is only private Pbsa, so private beds in student housing and co-living, compared to international students only, to see the students with deeper pockets and what's the ratio of those, how many of them they're all mobile, they all need bed. So how many of them could be satisfied with a bed in private Pbsa? And as you can see, in CEE, there is a lot of public stock. Prague, about 24,000 private Pbsa, public Pbsa. Warsaw, etc., the same. But the stock, the public stock, is very obsolete, very old, and not suitable for current students. It's not as old as in Western Europe, but in Eastern Europe or Central and Eastern Europe, the product is as old and obsolete and unsuitable, unfit for purpose, that basically Erasmus students and international students or local students with more sort of affordability, they don't want to stay there, and the only option are flats. But if they could, or if they can, they move to private Pbsa, because on top of what flats offer, they have also community and better location and flexibility for short stays. So, long story short, the situation in CEE is even more dramatic than in Western Europe, because universities not only have very obsolete stock, but they don't build any new stock. In Western Europe, it's at least some new public stock, but in CEE, universities don't have the capacity, financial capacity, or expertise to build up a new stock. So the private sector is taking over, and is sort of a solution to the situation. So student numbers, so demand, how many students are knocking on the doors of student housing? Over here, we made a visual and numerical comparison. So number of students per city, and you can see the caliber of size of CEE cities and how they compare to Western Europe. So Warsaw, Krakow, and Budapest are the strongest hotspots for student demand, followed by Prague, Wroclaw, Poznań, and then basically the other cities in the region. Not only its number of domestic students, but also number of international students that CEE is very strong about. So CEE is in a situation that they have more English taught programs than their Western counterparts, because they are more forced to attract international students. And also these cities, on top of the international students, they have a lot of expats and young professionals, as there is a lot of foreign investments and service centers and business service centers. So there is a lot of movement of young professionals that sort of need a temporary product for housing like this one. Occupancy rates. As you can see over here, the DACH region or Netherlands, Germany, and then CEE have over 90% occupancies in last 12 months in their private student housing and co-living. Western Europe is in the zone of 80 to 90%. Of course, it depends on the property and city. So it might vary. Somewhere Valencia is 100% occupancies, but in Oviedo it might be 70%, but in average is about 80 to 90%. Some of the cities have noticed less, like Barcelona, Madrid, and Dublin, for their specific reasons. But we can see that the CEE region is rather stronger and better performing, and it's mostly because the student and young professional mobility is intra-regional. Therefore, the students had more opportunities to arrive to their study destination. Examples of a product. There is not so much private Pbsa in the region, but we have seen last 3 years to be very active. Like example of Milestone in Vienna, or Dean's College in Budapest, very successful project. And if we have Balint over here in the audience, that would be nice to hear from him later on. Then FIS in Prague from Karlin Group, and IC Campus, Academic Collegia, which is sort of half open and in the making, and Unique from Corestate that probably Nils will share a little bit more. This is not all of it in the region, but good sort of snapshots. When you are back at home, and you can click on these projects and come to more details about them. So what's the potential of the region? When we took the average provision rate, so number of private beds to international students in Western European markets, we see 27% as a market benchmark, and we still cannot say that the market is saturated. So if only CEE matches the West Europe average, then this is the number of missing beds that the market could still deliver, and being in a safe zone of not be oversaturated. There is much more data than the missing beds, as you can see, per city, which might be useful for your insight into the market. I will dwell a little bit longer over here, because we made an effort to compare private rental market with Pbsa. What is it? Private rental markets are typical flats, and how much do students pay for a studio or one-bedroom apartment in particular cities. So you can see here in the white the private rental market and how much they pay in average per city for a studio or for one-bedroom apartment. In comparison with how much do they pay for private student housing studio in that particular city, so that we can see the premium. We can see this in Western Europe, and we can see this in CEE, the differences. And this sort of data and analysis gives us a very clear message that while in Western Europe the market has matured, and there is a premium of in between what is offered, it's the 20 square meters studio, but with communal life, community life, with communal premises, with flexibility, so you don't need to take a 1-year lease, and all in one bill benefit. So in average across Europe, the premium is 15%. While in CEE, we can see it's negative. So basically the private rental market that is available for those students who can afford it is actually more expensive than the private Pbsa in most of the cities. This is mostly because it's an early market. The market has not adopted the new product that strongly, because it's a very little product on the market. But the good news is that once the market adoption is stronger, we can expect the same development in CEE as we can see in Western Europe, that the private Pbsa will be in about 15% premium over the private rental market. But some of the experienced players, like we can see here today, be it Nils or Armon, or I saw John from Kajima, guys from Griffin, or Balin from Corestate, from Budapest, can say that they are already charging much more than this once the students and young professionals got used to their premises. So what do students want? We made surveys and asked students and young professionals what do they want in terms of product, location, rental, rent prices, etc. It's a little bit of complex answer, which we try to simplify in this slide. So let me explain. These are the top 3 preferred facilities per each city, because they differ. Not that much, but slightly. What do students want to see in their premises? Should they move or should they live there? And we can see that's mostly around communal kitchen, bar, restaurant, laundry room, study room, gym. Basically, we will see more detailed analysis of this later on. While when it comes to rent levels, we look at the upper 25% of students and young professionals, because we don't need to look at 100%. So upper 25% of the market, how much they are willing to pay for this type of product per city. And we can see we call it market tolerance. It's weighted, so we factor in not only the surveys, but also the overall market tolerance, and there are multiple factors that we put in. But it's about 450 euro and more in Warsaw, 500 in Prague, 400 and more in Brno. And we know that the private product in Brno, Domek, is actually priced even more than this, and it's very successful. So there is a testimony to that. Bratislava, 400 and more, Budapest, 500 and more. So as you can see, it's in sustainable levels now. And this market becomes quite investable. That's the more detailed analysis I mentioned. So this is a comparison of the blue of what students have available and what students want. So the blue columns mean these are results of surveys, what students want. And this column is what are they offered. So we map out all the stock and what amenities are offered to them in particular city. So this is a Warsaw case study. And we can see that, of course, Wi-Fi is a must. It's more important than the drinking water in the building for them. But for example, they want room cleaning, but it's not offered to them. So big disproportion, and probably a signal for operators in the region to address it. On the other hand, they are being offered bike rental, but they are not so much interested, as you can see. Gym, it's offered in about 22% cases, but the desire is about 40%. And terrace, definitely they want terrace, you know, and they are not offering it almost at all, as you can see. So this is just a snapshot of how the product can be determined and build really to the needs of the target audience, and therefore the consolidation of occupancies is then very fast. Most of the private stock in CEE actually consolidated faster than the one in Western Europe to 100%, 98% occupancies in year one, actually. Pipeline. So this is the sort of slide about the future. In Poland only, of course, we have data on entire region, but let's talk to the biggest market now. Over here, you can see all the projects that are in pipeline, in construction or in permit. Means that they are already determined to become student housing or co-living. We have not factored in those projects that are in plans or minds of people, but they have no building permit or construction has not started yet. It's about 5,500 beds, which means in investment terms about 300 million so far. Additional 10,000 beds are expected in this decade. So the additional 600 to 700 million. So about 1 billion investment in Poland, an additional 1 billion investment in other CEE. So it's a sort of 2 billion in investable market, new investment market as such. Okay. Some key metrics about the region. It's probably we're going deeper to financing now. The average LTVs in Western Europe are in 70-30, while in CEE 60-40, sometimes 55-45, especially now in COVID, but slightly behind in the Western Europe. The turnkey price per unit, I'm in studio, so bed, bath, and kitchenette is about 55,000 euro. Slightly more in the capital cities than elsewhere, but not so different. Average licensing, except Prague, I have to say, is 6 months, and most of the properties are running under the hotel permit and taxation. But Prague is the licensing is like 2-3 years, and probably Zdena from Zeitgeist can tell us more about that, how difficult it is to get the licensing there. But as I mentioned, the build cost, the initial CAPEX is relatively still low, and low, about 20-30% lower than in Western Europe, while the rents are not so different from West Europe average, which is 660 euro. On the other hand, the transaction price is relatively high because of a high NOI in valuation and low yields in Western Europe. The yields for this asset class, exit yields, cap rates in Western Europe are 3.4% in Germany, 4.25% in Vienna and Paris, about 5% in Spain. So they already compressed, and the exits are quite convenient. Banking. So while in Western Europe, there are about 40 banks fighting for opportunity to finance the asset class. In CEE, it's still just at the beginning. We have about 14 banks today in the room. So hopefully this is somehow useful for them to learn a bit more about this asset class. Some of the banks already have their experience, like PKO, Bank Polski, or Santander, mBank, or other banks in Czech Republic, Slovakia, and Hungary. Most of them are positive experience, but let's be honest, some of them have a negative experience because in emerging markets, some product is not build well and with mistakes, and makes not the best benchmark. But most of the product is done well, financed well. The criteria are relatively straightforward to underwrite. It's comparable with West Europe, and the data is available. So perhaps with this we can dive even deeper over here. And that's the last slide. And I will probably explain it a little bit more. We created a typical property for student housing and co-living in the region, with about, and it's a dummy case, of course, but not far from reality. So Warsaw, 350 beds to be open in 2024. So 3 years from now, let's say. 20 square meters of a room, which is gross with walls and shafts. So basically probably 17 square meters net. 480 rent, that's net, without VAT, which is 8% in Poland. So in 2024, this is chargeable in good location. Of course, not everywhere. Which brings us to NOI, which is about 67.5% of the total gross revenue income, because the OPEX, CAPEX sinking fund and the management fee create about 32.5% total costs. So we have about 10,000 square meters GBA building. That's basically what this asset class needs, because 300 beds and more is sort of a bottom line to have an efficient project. The smaller it is, the higher is the OPEX and smaller valuation. So the GLA for 350 rooms is about 6,500 square meters. So the turnkey cost would be about 19 million with 55,000 euro build CAPEX per unit, with net initial yield 672. And then we move to year 3 of operation, which we believe, based on the yield compression and development across all the 130 markets that we measure, it is expected that the exit yield will be at 5.25 in 2026 in this asset class in Warsaw, which would bring the equity multiple at about 2.6, and IRRs in the zone of 31%. Of course, they go down with the age, so we would be in 26% IRRs. Of course, this is an ideal product. Ideal never happens. So you need to make compromises to building permit, or it's a retrofit, etc. So such IRRs probably would not be there, but in average, the IRRs are in reality in the zone of 15 to 20%. And the equity multiple is in the zone of 1.8 to 2.3. That's it. Thank you. I hope it was useful. Over to you, Richard.
Great, thanks very much, Samuel. So lots to drill down to and pick up in that, I think. And again, so if you've got views, do put them in the chat, or simply unmute and ask a question when the opportunity arises. But let's just drill down a little bit into some of those key topics, I think there. Nils, maybe starting with you. Feel free to react to any of the kind of things in Samuel's presentation there. But I wanted to just do a quick comparison in terms of the short-term trends and the outlook for student housing markets. I guess that you're seeing there, both in Western Europe, but also in CEE, and how you're comparing those with the sort of longer-term outlook and trends.
Yeah, happy to do that. Obviously, I think a lot of valuable information, Samuel. Many thanks for that. Very good. I mean, clearly, I think we have to sort of look at the overall medium to long-term picture, which we see extremely positive for the Polish market and some of the others, for the very reasons that Samuel has been mentioning. And I think your example also in terms of the your ideal underwriting for Warsaw. Well, maybe not everything is always ideal, but I think it goes to show that you can actually do something in this market, but that is clearly out of reach in the Western European markets. Sort of what are the, obviously for us also, it's still early days because we have one property operating that just started within the COVID year, and then others in the pipeline. But I think maybe the most important short-term and medium-term differences from our point of view that one really does need to consider is, well, there is huge potential for a maturing market, for moving forward, for a kind of interesting supply and demand picture. One has to be, I think, extra cautious in the sense of affordability, and well, how fast do the different pieces of the jigsaw actually move together. So in my view, there is obviously all the fundamentals that Samuel has mentioned. Do rents kind of move at the same speed as service costs and construction costs at the moment necessarily? I think one has to put a bit of a question mark in that. So while this remains attractive, I think the margins are getting a bit thinner maybe than your ideal one, Samuel, especially as where it really is both construction cost and I think service provider cost is certainly being developing quicker than maybe rental level. And the other bit is also, while we have obviously even more kind of accelerated by well, last year's and this year's current COVID events, the overall trend into singles and studios more or less everywhere. I think considering pricing sensitivity in a lot of the Central European markets, we still have a higher proportion there of non-single units in the market, which is one of the major differences also for our product, where we, for instance, in Gdansk have in the new one have quite a high number of studios effectively, and some clusters, and that is something that we see disappearing quicker elsewhere than maybe in these markets now.
Okay, good. John, I was interested to see in Samuel's kind of presentation there about the difference, you know, I mean, it was mentioned there in the slide that people were looking for terraces, were looking for gyms, were looking for, you know, extra cleaning, those kinds of things. I guess, John, from your perspective, what are you seeing in terms of demand? And obviously you're operating both in the Polish market, but also in the UK market and other markets. What are you seeing in terms of demand? Is there different demand types in CEE as you're seeing it from let's say the UK?
I mean, it's early days for us in Poland. We're still very much, although we are running our courses now, we're still looking to grow much larger over the next few years, and the COVID situation hasn't helped. I think it is interesting in the presentation, which I thought was excellent, Samuel, thank you for that, was the number of beds in the whole of Poland. And the maturity of the UK market. In Coventry itself, which is where our main university is based, there are 17,500 beds, so almost 3 times the amount in the total in the country in Poland. And but it's absolutely as described. It's more and more high quality studio flats, but long gone are the days in terms of landlords in private housing renting rooms in houses and that sort of thing. Virtually, those numbers are really, really reduced. And when we look for the international markets, we'll be looking, you know, for the obvious parts of the world, which would be India and China. There is increasing numbers of growing middle classes in both countries expect a certain level of property, and the sorts of things we've seen described in the video is exactly the sorts of thing that we are experiencing here in the UK, and would anticipate that in our operation in Poland. And I think more and more students aren't just come to the receive the words of wisdom from academics, it is very much a package. It's how much is the city a student city, and what the level of accommodation, and particularly when you're bringing in people from, as we expect, from different countries who will want to be together when they come and live in the university city. They will want that sort of specifically developed student accommodation. But of the sorts of quality that Samuel described, that's exactly what we're seeing in the UK. That's what we would expect to be able to offer when we go out to international markets, international agents, for our operation in Poland.
Okay, good. I'm going to launch a couple of polls here. So feel free to answer those. The first one is on the main challenge. So what's the main challenge to establish Pbsa, purpose-built student accommodation in CEE? So it'd be interesting just to get your views on those. And in the meantime, Armon, I just wanted to come to you. Samuel there had some slides on relative pricing and those kinds of things. How do you see that in terms of demand for CEE especially? Is it more price sensitive? What's your view on that?
So, the reality is that there is currently only a 8% supply of student housing in at least Poland. I don't know the others. So that means that 92% of the market is living in the private rental market. That is the market. That is the competition. So that is where we price against. And so where we currently are, we are certainly not in the high-end range. I loved Samuel's slide from a couple of webcasts ago, which had us in the medium end of the pricing, even for student housing. And I think in the end, what students want is to see the value. Yes, it is about the underlying price, but it's about the value of what they're getting. And that includes the experience, that includes the surroundings, that includes the daily life of what they're getting. And so if it's just a room and a bed, then yes, the price is very important. But as you said, I think also the location. So it really depends on what somebody is trying to provide. And then you can go down to, well, how do I price this against the market? We have not seen it. Our property in Łódź is almost entirely full. The university is closed. We only have about 22% Polish students, so the rest are internationals. So they are coming, and they don't seem to be price sensitive. They are coming for the experience, and they're coming for the value. And the important thing really is, I go on about value, is it's not just a value for the students, it's for the parents, the universities, and the municipalities recognizing that.
Yeah, I think Armon, maybe just to comment on that, Richard, as well. I think it's clearly the kind of overall experience. I mean, this is even doesn't really matter whether it's Poland or anywhere else. I mean, I think these are very much the same value drivers, Armon, that you mentioned also in other markets, where there is a whole picture, and there's actually also different decision makers that are driving that value decision. Parents extremely important, and I mean the kind of ease of and relative security of having people in accommodation is a big driver, and clearly in markets where there is a high proportion now of international students, this is clearly one of the important ones too. Yeah.
Yeah, good. I'll just share this briefly because I think it's interesting just to take a look at the results. Also, in case anybody's joining on a phone line, I'll read these. But what's the main challenge to establish Pbsa in CEE? So economic feasibility was actually the highest at 23%. Then going down in order, rent levels, lack of opportunities, financing, obtaining a building permit and regulations, lack of operators. But interestingly, there was nobody put demand. So it's interesting to see that demand is significantly there. Does that surprise you, Samuel, or does that sort of match with your expectations?
It's pretty much significant for the emerging market that it's a little bit of everything, but the demand is not a question here. It's not a surprise for me because demand is there. So I think that various people have the various reasons why they are either hesitant or investigating. And I think this will sort of, like in France or Germany or Spain, reach the tipping point very soon and then change to sort of maturing and growing market.
Okay, good. I've just done another one which is for occupancy rates. So feel free to also be interesting to pick up your views on. I know, Samuel, you mentioned there some occupancy rates, but feel free to answer those. It'd be interesting to get from any of the panel their views. I mean, what's your experience of occupancy rates? And that's to anybody, John, Armon, Nils, feel free to pick that up. How have you been seeing those in terms of the crisis?
Yeah, I mean, as I mentioned, our Łódź property is central Poland. That has pretty much been at 90+% through the last year. Interestingly, we've had, the university dorms close, and so students come to us from those. We've had students recognize that all their friends are at our place, so they've moved out of their private rental to our place. But increasingly, the Erasmus program continues to be a massive benefit because all these internationals continue to travel into Poland because of the grants, even though the universities are closed. They want the quote unquote university experience, even though they're not going to class, they're just being with friends.
If I may shortly, we have some other employees living in this type of properties in Vienna, so we have a taste of what's going on in occupancies there. In Bratislava, Brno, Prague, and Poland, we visited the properties in last 2 months, and I was really shocked that, for example, some of the student depots, they didn't even have a room to show us. It was totally full in Lublin, for example. There was no room, and we could maybe get a room in April, and it was in February. Or BaseCamp properties, or Unique or Collegio and others, fees, Domek, student residence in Bratislava. That all is very close to be full.
Okay, good. And I think we've got Stuart Moore with us, have we, Stuart? I think I can see you there. Yeah. Are you happy to share your kind of views on what you're seeing at the moment? Because obviously you've got a broad view across different markets as well, Stuart.
Yeah, it's been really fascinating. I mean, it's interesting what Samuel said about understanding in a market, and Armon said pretty much the same. We found it takes about 3 years for the first scheme in a city to become understood. After that, it becomes known and understood what it is, and I think that really helps establish the whole Pbsa market within a particular city. First 3 years can be problematic, and you start to see that in the rent reflection. So again, you can see in Western Europe and the UK, there was a premium attached to it, and it goes back to what Armon was saying about value. There's a perceived value to Pbsa, whereas if you look at in the emerging market that we're talking about today, you're effectively saying we have to underprice the existing studio, this existing flat share model, because this product isn't recognized for the value that it can necessarily add. So I think that has a knock-on effect for pricing. I think it has a knock-on effect for effectively understanding the value, but primarily it is a challenge to get the occupancy there when you're the first into a city and it needs to get established. So it takes a little bit longer just to get going and stabilization. But then following on top of that, as soon as there's a, let's call it an icebreaker to go through, it becomes quite simple to move forward.
Okay, good. Thanks very much, Stuart. That was great. Thanks for sharing that. I'm just going to show you the poll results here. So top was 90 to 95%, with 35%. Interestingly, under 70% was at 19%. And earlier on, I was very depressed because they were coming neck and neck at one point. So this does seem to bear out that there's some, there's actually quite a big difference in the market between different types of product, I would imagine. There's a question, thanks very much, Gary, for this in the chat, which I'll just pick up, which is, as well as the obvious effect COVID is having on markets in general, is it also having effects on the political stage of CEE countries? How much of a consideration is this for investors when evaluating opportunities? So I guess how much is the politics side of this playing a role in terms of CEE countries? And Gary, if I've misunderstood that question, do feel free to ask it yourself.
I'll jump in.
That's perfect, Richard. Thank you.
Okay, thanks, Gary.
Yeah, I think it's a very good question. Honestly, we are only in Poland. We are not in the other countries. We're looking at Czech, but we will not go to other CEE countries because of political issues. We are a long-term owner and investor, and as such, we cannot jump in the middle of EU fights. Poland, we are hoping, will continue to be calmer in that side, and we would hope to expect that will continue until long term. But when it comes to the other countries, we just will not go into them until that situation calms down or evens out to be nice again, because we cannot have what has happened obviously in the UK, where the Erasmus program is gone and EU funds start evaporating, because when we talk about international students into these countries, that can have a very dramatic effect. So for right now in Poland, we're feeling very comfortable, but that's it for now.
Okay, good. And John, what's your perspective on that? I mean, there are obviously complications with UK and Brexit. You mentioned them a little bit in your introduction at the beginning, but I guess for where you're operating in Poland, how much of the demand do you perceive as coming from international, whether that's ex-EU or within the EU? And do you see there being opportunities for UK students to go to Poland? What's your sense of that?
I mean, we primarily established ourselves in Wroclaw because we wanted to look for long-term sustainability of our operation, and for that we needed to make a contribution to the city and to the region, the economic contribution. So we looked at all the major cities in Poland before we chose Wroclaw, and part of the reason we chose that was the high level of foreign investment and the fact that they do need graduates who are well qualified and so on. The political situation for us is more impacted. I mean, we've been very welcomed by the Polish state and by the local politicians, and it is very stable, which is a good thing as well. So we. I think in terms of we've been building up our legal sort of status such that we can now recruit students from outside the European Union. That's important to us. But primarily, we see international students as being cream on top of the organisation. We are primarily there to serve the needs of the locality. And where we feel we have something, I mean, someone mentioned before the number of English courses based in English. The fact that we're regulated by UK authorities means that we have a curriculum which can be more can be changed and altered and respond to local market needs. So that's an important part of it. So. So the politics is important, but a stable country, one which is welcoming, that's been very good. and the local politics is very positive as well. So we're very happy where we are in Wroclaw.
Okay, good. I can see we've got Joao Sriracha here as well. Joao, maybe just coming to you, I suppose just to get your perspective on it. How are you seeing the demand, and also, I guess from a development point of view, is this all new development in order to get the right product, or is this are there opportunities to reconvert? What's your overall view?
Yeah, thanks a lot for calling me in. Once again, thank you for being in such a great panel organized by BONARD, and seeing all these people that are very, very experienced. And basically for myself, it's many of these products we are speaking today are kind of a benchmark in the market. So all the products from Armon, the BaseCamp that is doing huge developments in Poland, and also from Corestate. So it's great to have the opportunity to share some of the thoughts. Coming back to your question, Richard, definitely there is no question mark to demand. The Poland has been a country that has developed very fast since came out from communist times. But nevertheless, when we talk about, let's say, more modern or trendy asset class, there is a lot left to do. So for example, if you look at the residential development that has been in the last 10 years or 15 years, it has been huge. So we can say that we are already at an European level, especially on main cities. But when you look at the asset class, like for example, Pbsa, we can see that we are just at the beginning of the development. And the reason I say this is, as Samuel has mentioned, what is even considered part of the pipeline, or not the pipeline, the projects that are operating under private residences are very obsolete, are not in accordance with expectations for international students. One thing that I must say is that I see Poland very similar to Germany, and why I say this is because as we see, there are not it's not only Warsaw that is becoming a very big city. We have different levels of development, but the regional cities are very strong. The case of Wroclaw, it's a very good example. The case of Krakow, the case of Poznan. So we have very big centers of a lot of international and local students. And this combination, I think, is what makes a really good market for the future. Obviously, coming back to the development issue, when you have an operator that already knows exactly what kind of room, what kind of standard they would like to provide, then obviously it would be better, in my perspective, to go for a greenfield opportunity in which you can implement exactly the project that you are looking for, and you can achieve definitely better efficiencies rather than reconvert, for example, an old building. But here we need to, obviously, every case is a case. And if we are looking at an excellent opportunity that is located in city center or old town or next to a university, sometimes reconversions are very interesting to analyze. Although it's clear that the CAPEX for a conversion will be usually higher and the licensing period can be usually higher than a greenfield, let's say.
Okay, great. I'm going to launch a quick poll here as well, which is, how do you rate Pbsa investment potential in CEE in the next 2 years? So it'll be interesting to get your views on that. We're getting quite tight for time. Goodness, how time has flown. There's about 6 minutes left. So I just wanted to pick up on a couple of things, because just in terms of how we're seeing the market, I suppose. Zadina, I can't see you on my screen at the moment, but I think you're there from Zeitgeist. I just wanted to pick up with you how you see, I suppose, this. Because Samuel mentioned there the ability of this product to be able to reach out to other audiences potentially. So how do you see the student housing versus the other types of residential, you know, that you're looking at the moment in the region?
Yes. Difficult question, I would say. I mean, I'm from Zeitraum student housing, so we are student housing operator. We are belonging to Zeitgeist Asset Management Group, of course. So, and Zeitgeist is the one who is the asset manager. He was handling with investors, buying assets from for investors. And the let's say main focus of Zeitgeist at the moment is resi for rent. So this is one operational tool we are providing. Honestly, in the CEE countries, so let's say Czech Republic, Poland, a few years ago there haven't been any market for that. Resi for rent, I would say 10 years ago, 5 years ago, didn't exist. So I think also the opportunities on this are quite big. For me as an operator, student.
Oh, we've lost you there, Zadina, I think. What I'll do is I'll quickly share these results because I think those are interesting. So how do you rate Pbsa investment potential in CEE in the next 2 years? And high is 64%, moderate is 34%. And I'm glad I waited the extra second because somebody came in with neutral, which made it 2% for neutral. But obviously a very kind of positive view there, I think. Given that we've only got around 4 minutes left now, and I'm keen to make sure that we finish on time for all of you who've put this in your diaries. I just wanted to do a quick kind of last round of everybody, really. Just in terms of I suppose how you're seeing the market. So a couple of things which would be interesting is, you know, what's the most important piece of advice for anyone seeking to enter these markets, and also I guess what are you seeing in terms of really opportunities for your business? So Samuel, let's just kick off with you. So a couple of minutes just on that, if you could.
Okay, I was kind of hoping to be last, but
well, you can be last if you want. That's fine.
I buy some time to gentlemen. I think as in any emerging region, I would start with what I've heard from actually Bob Crompton, if some of you know him, and he started France in 2011, I think. And people were asking him, what's a good market in France? And he said, no, whatever city that doesn't make a resistance to me is a good city, because there is such a great gap in between the demand and supply that basically that's the situation now in this emerging region. On the other hand, I would say the flip side of the same coin is micro-location. So the macro is flying very well in CEE, and there is a lot of money to be made for investors, developers, banks, no question about that, like in any emerging region with reasonable risk to take. But the micro location, I saw unfortunately some of the product already in this region to be in wrong location, or you know, wrong size. You know, how you're gonna exit from small property in 2026. So if you have 60 beds, you know, 100 beds, no institutional investor will buy it from you. Leo from APG is here, probably he can say that such a property would not be of his interest in 2026. So when we look at the market through the institutional investors' eyes in 2026, when people will be exiting, the investors are coming for scale. So you need 300 plus beds buildings in A locations with secured, stabilized demand. So be selective, don't rush it, and skew the market by wrong location, sizes, or concept. Last thing, independent operators. I think the market could benefit from brands like CRM or others, you know, to run the properties in this market. Because if people are going to do their own OpCo, they're gonna spend 5 years doing their mistakes. Banks will not be happy. So independent operators, professional operators who would come would actually make the market right, using all their experience from West Europe, and made a short journey to success for the investor, bank, and themselves. So.
Yeah, I mean, if I was to just chip in at last, you know, I would, you know, we need more supply into the market, massively undersupplied, and it certainly helps John, all the universities and municipalities. Reiterating what Samuel said, coming to the market with the wrong product is not going to help. It's going to make it harder to finance, and it's going to hurt the overall industry. I think it's larger is better, but to an extent that you can actually handle it. Someone wrote here about ESG and energy efficiency. It's been a front thing for us for many years. ESG program has been something we've been working on for 3 to 4 years now. All of our properties are BREEAM Silver or better, and that will continue to be an important focus for us. There are now financing abilities, not just through the EU, but there's also the one of the Polish banks, which is helping to finance such things. But again, new people coming to the market will naturally find it harder with the financing side initially. But honestly, I find Poland a great place to do business. Easy to do business, very friendly government, and very welcoming, as John has seen, John Dishman has seen. So get in contact, come and see the market, and come and help develop it out with Nils, myself, and a number of the others on this call.
Okay, great. John, yeah.
One time, it's not for me to give advice to colleagues, but from one of the things that we have learned around the international student recruitment side is that there are rules in Poland over how much advice we as an institution can give international students about their getting their visa and determining their residency rights. And part of that advice is how much we can talk about local accommodation. So my advice is, if you're an operator, we're close to a university in Poland which is recruiting international students, you try to talk to that university about sorts of things that you can offer, because the university itself probably cannot offer advice about accommodation or residency. It's just that's an issue which has been for us, and I think that would be good advice, I think.
Okay, great. Nils.
Yeah, well, just really, I think can only share Armon, your positive view on the market. I think you're right. There is opportunity. Actually, I think there is also opportunity to be finding the right locations. And what makes Poland especially attractive to us is really the ability that there is scalability, and not only because of the large number of students, but really you have quite a few different markets that justify further investment and further provision of units. So we're very optimistic about this. Yes, I'm happy to, Samuel, you suggested CRM to take on more business. Happy to help there, obviously. And as I think others would be on the panel too. But I think we can be very optimistic here also, considering that there really is a positive attitude within most city governments to our joint program here. Yeah.
Super. There was a quick question, which thanks very much, Elizabeth, for highlighting the Silesia region and the opportunities also in Katowice. So if anybody's interested in that, do get in contact with Elizabeth on the chat there. She's waving to us as well. Thanks, Elizabeth. There was a quick question as well that came in from Hamish, and I just want to quickly answer that, which is Fudan University coming to Budapest from China, will this have an impact on Budapest and CEE in terms of your views on it or the attractiveness of the market? Anybody have a view on that?
I can
You don't have to have a view,
say,
but...
I can, first of all, Nils, I didn't not recommend CRM, I just said like CRM. So of course, I think as Armon said, the more proper product is coming to the market, be it CRM or Corestate, Unique and others, so quality players, then you know, it's good. And with more meal, there is more appetite and faster adoption of students to the product. So it will be good for everybody. For the Fudan and Budapest situation, well, the arrival of Chinese university to Budapest is a huge thing, you know. So to have more Chinese are the best customers for this type of a product. They stay long, they pay high, and they the families are looking for structured, safe environment. So it's almost a game changer. On the other hand, there are not the best perceptions of Budapest in a political world, but when you look at micro and you are there and what's, you know, you see so many German medical students in Balin's property, Dean's Hotel, you know, being totally packed. And on top of it, the Chinese university coming, not to mention even without that, Budapest has phenomenal numbers in terms of demand, supply and rents. Probably the best from the region, even better than Prague. So yes, it might be issue for long players like Armon, probably less so. But the fundamentals of the market balance out the sort of a political gray zone that might be there.
Okay, that's great. Now we've run out of time here. In fact, we've run over. Apologies, I've run over time for you all, but really interesting discussion. I think there. Samuel, I don't know what you want to do. I mean, I have to drop out and do an interview now. But since this is a relaxed format, Samuel, I'm happy to leave this open if there are chats that people want to have together with one another, or if everybody has meetings that they need to rush to. Samuel, are there questions that you want to take from anybody else or discussions that you want to have?
I think that unless there are 15 people crying to say that we want to take it longer, I think we have to be respectful to the time of everybody. And should there be interest, we can have another session on this topic and go further and deeper. I'm really pleased. I saw about 100 people being on the session, relevant people, about 80 stayed till the end, which is very significant. And we will distribute the presentation. And let's continue having conversation about emerging markets, because more conversation, information, education, sharing about new markets can only help the market.
Yeah, absolutely. And I'm very much looking forward to the time when we can all go back and visit some of these markets as well, which would be perfect. Thanks very much from my side. Thank you to all for your questions. It was a really interactive session. I learned a lot from it. I hope everybody else found it valuable. Thanks very much to all of the speakers and to everybody who contributed. It suggests to me that we should have another one of these very soon. But thanks very much, everybody. Bye-bye.
Great. Thank you, Richard.
Thank you. Thank you. Bye-bye.